Hello, young traders. Doing trouble there from Drfx. Swing trading mentoring. Going to be taking a look at the Canadian Swiss franc, which is the currency pair that we're now in, which we traded short or entered a short position a few hours ago at the end of the US trading session today. So I'm going to be taking a look at the main technical factors that supported this trade, where basically what we're doing is to trade the waves that are telling us that the market is going to be forming a consolidation setup on the daily chart as well as on the 4-hour chart of this currency pair. Essentially what we're doing is trading the waves that lead to the formation of consolidation. So instead of waiting until the boundaries of resistance and support have been clearly formed, what we do is to spot the early bearish and bullish waves that tell us that the market is going to be forming consolidation and trade these waves until the consolidation has been completed. Of course, everything is done within the context of the daily chart and the 4-hour chart. Market direction is determined by these two time frames, with entry taking place using the signals and patterns provided by the 4-hour chart. To protect the trade until our target has been hit, we also use the 4-hour chart, where the stop loss is placed at trend lines, consolidation boundaries of resistance and support, as well as the highs and lows of candlestick formations and counter trend line setups. Where possible and justified, and if the 4-hour chart would require too large of a stop loss, then we will go down to the 1-hour chart and identify a strong stop loss that would allow us to stay in the trade until the trade has been completed. Everything that is done within the context of this trading strategy, where basically what I do is to target trading gains of between 50 and 70 pips within 24 hours using the signals and patterns provided by the daily chart and the 4-hour chart. Where possible and justified, however, we would also target trades of between 30 pips and 50 pips using within the same 24-hour holding period. And in rare cases, we would also target trading gains of between 70 pips and 100 pips, extending the holding period from 24 hours to 48 hours in order to ensure that we're able to capture this larger range of movement. Now here you can see the setup on the Canadian Swiss franc daily chart, where based on the waves that have been formed so far on this time frame, as well as on the 4-hour chart that we'll take a look at in a while, it gives us the impression that the market is going to be forming a consolidation over the next several days, and that what is taking place now is that the market is getting ready to U-turn at this area here, provide us with a bearish signal, which will take out this bull candle and indicate the start of the movement back down to the support boundary that has already been formed. And of course, after it does that, it will then continue to wave and move within the boundaries of resistance and support that would have been completed until a consolidation has been broken, either at resistance or below support. Now, taking a look so far on what is on the 4-hour chart, you can see here that the U-turn has actually started, indicating the possible start of a downtrend. But so far with these bearish signals that have been given, they have been weak so far. So nothing convincing that would justify opening up a short position to take advantage of this expected downtrend. So we would have to wait until the market provides us with a stronger signal to justify the trade, to justify opening up a short position. And as you can see here, eventually the market did provide us with that signal in the form of this bearish engulfing candlestick formation. And so since this was also halfway the distance between resistance and support, it was deemed a very strong signal. And so entry took place at the close of this candle, with the stop loss placed at 0.7563 above the formation and the target set at 0.7480, just above the support boundary of this setup. So the expectation is that with this stronger signal compared to what we had here before, this is likely to take us down towards the support area here. And entry actually took place at 0.7520. So we're talking about a 43 pip stop loss going after a trading gain of 40 pips. And the expectation is that this target should be hit within 24 hours. So basically that's the setup and the justification for this trade on the Canadian Swiss franc. Essentially what we're trading is the possible formation of a range consolidation setup on both the daily chart and the 4-hour chart. And so what was needed was for the market to provide us with a signal to start the downtrend. The 4-hour chart did provide us with an initial signal, but this was too weak to actually try to justify trading the position, trading the movement. And so it was only after the market provided us with a stronger signal that we decided to enter the market. And the expectation is that this should provide us with a 40 pip trading gain as we aim to capture this trading gain and exit the trade just above the support boundary of what is expected to be a range consolidation setup. So we're going to be waiting and holding on to this trade for the next 24 hours. Of course, it is very important that we do not monitor the trade. We do not look at the market any at all because of the temptation to exit the trade too early if we start to see temporary pullbacks against our position. So what I'm going to be doing is, as you know, I have an FX Pro live account. So what is done is that this platform provides me with alerts as to when the trade has been closed. So what I'll be doing is monitoring my email for this alert. And as soon as I've received it, then I'll pass it on in terms of the trading result and send you an email providing you with a summary of this trade. So let's wait to see what happens with this trade and take it from there.